Hello there everybody! Green time, hotting up, and it looks like there's a bit of panic coming back into the markets, so we thought we'd have a look at the gold market, see if we can see any clues from there. Well, here we have the recent action over the last few years on the weekly chart, and we have in this vicinity here where I've labelled 5 what many people would see to be a kind of triangle. They are thinking it's a wave 4 and this is a wave 5 breakout. I have to say I don't agree with them. I think that's a dumb play. I think they're going to get caught out by the C wave that's about to happen. Why do I think this? Well, I do think that the top in 2008, in line with the stock market, was a top. It was the top of wave 1, and it was the termination of a blow-off top. The actions of the gold market by the government in the US is basically a complex corrective which took the form of a triple 3, that's an A wave down from the top, and a new, even worse high to catch out the shorters, which is taking the form of a B wave. A new B wave high, who'd have thought it? And my read is we're going to have a flat wave 2 in this new bull market for commodities, a new bull market for gold from the 1999-2000 lows. So we're looking at a huge wave 1 from the lows to 2000. We're looking at a flat which will play out over the 4 or so years for that correction, and then we'll have a monster wave 3 where gold skyrockets. That must have to time with some really strong inflation numbers, I think, or it just could be a stagflation period. That's a possibility as well, where gold is just seen as a safer place to be, and it could be a speculator's bubble as well. But there's so many people playing the gold market at the moment, as I heard yesterday, that if they call for delivery of that gold, there isn't enough in the world to support that demand. So the market should just go into a skyrocket skywards. Anyhow, let's get back to the waves. So I'm reading this as a wave A. This is a wave B, of which we've had an A here, a B down to here. Some people would have this as a B wave triangle. I don't favour that, because I can create a C wave here where the terminus of 1 and 5 are parallel to 2 and 4, and then we had a 3 wave here which ties in very nicely for this kind of stretched out wave as being a wave 3. So I'm quite confident of this read. I think we're practically there. We could obviously create a new high here which would create a terminus parallel with 3, but I think given the state of play with the stock markets, I think the safer play is to play down from here. It's practically at that level, and this is the action today on the 12th of May. So projection for the C wave of this flat, well, we've got a possible area around the 875 marker, could be 900 by the time it gets down there, or we could be at this critical level where 3 ended, and we've got the A wave bottom. That would be about 710, or I favour falling back to this wave 4 level, the wave 4 of the large scale wave 1, which would be about 600. So that would give an overall correction from wave 1 of 40%. Okay, that's a decent wave 2 correction in my eyes. Now, why do I not think this is a wave 4? Well, the one reason is the longer term chart, and if I show you that now, this is courtesy of Futures Buzz, this chart, though I have labelled it myself. Here we have a top in 1980. When you look on the the logarithmic chart for the long term, you'll see that since the turn of the century, this can easily be read as a wave 3. And it was a blow off top in 1980. The end of wave 3, the grand scale wave 3. And we've had a triangle, which is clearly a wave 4, playing out through the 80s and 90s. And we had a breakout of that triangle finally in about 02. This is wave 1. I have a running flat for wave 2. And then we go pretty much vertical for wave 3. A sharp wave 4 correction. And then we have wave 5 with pretty hidden wave 4. Now, why do I favour this read, and why do I not have 5 as 3 and this is a wave 4? Well, mainly it's because if this is wave 1, then we can draw a parallel channel, believe it or not, where 2 and 4 line up with 1, 3 and 5, and that's a beautiful chart. Wave 1, you'll see, was from about 250 up to 420, so 170, and wave 2 was from 420 to 720, which is 300. So wave 3 is not the smallest of the waves. The proportionality between the waves looks to fit fairly well, with the blow off top having a 5, which gets out of hand. So that's my read of the gold market. It is going to be very bullish over the next generation. However, at the moment, looks like we're due a correction, and it could go all the way down to around the 690 mark, maybe 570. So some good selling on gold. Thanks for watching.